very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here with you, and it is Terrific Tuesday. Hopefully you're off to a terrific start of your workday. If not, just change it in a heartbeat. And if we take a look at these markets, you got the roller coaster of roller coasters. You know, the theme parks couldn't build a roller coaster like this. Yesterday you had, as you know, the Dow finished down 142, but that really wasn't a story, especially when you consider where it started out at. Even the ES Mini, you know, on the futures, yesterday you had the S&P finished down 17 points. Of course, the futures, if you took a look at it, on Sunday evening had popped all the way up to the price point of $13.42, and by the time it was all said and done at 6:30 last night, they made a low of $12.97. $12.97, folks, to $13.42. That is a roller coaster, as Tom likes to say, and a few others, in spades. Of course, when it got down there, it made that 1 to 2, A to B equals C to D, folks, and if you're watching us on TigerTV, you know you'll be able to see that screen. We can pop that up there, and we absolutely appreciate everybody listening to us on the radio. You can always catch an archive of this show. That way you'll be able to see the charts that we show here. You'll be able to see the patterns that are out there, because it's really all about patterns. We each have patterns in our life. You know, some of them are good, some of them aren't so good, but they're simply patterns. The market has patterns here. You can learn to trade these markets. In fact, a great way to do it, folks, is there is a Tiger Dollar promotion that we have going on. If you're not familiar with what that is, it's not our funny money. It is a way to be able to give you more a return on your investment. And what you're going to, and when I talk about return on your investment, you know, there's three, I think there's three different options. If you go to the homepage of TFNN.com, take a look at the Tiger Dollar promotion. It's the first item that should be in the carousel right up there. And so you'll be able to get more money on your money. You'll be able to stretch your dollar up. But more important than that, it is the 10 plus hours of training that you're going to get that's going to be archived on your members page, and it's each of the contributors here giving you some different element of trading that you need to know. There's nothing like it that I'm aware of, and you can use all of the monies. They never they never expire, and you can use them on any of the services here at TFNN. Didn't actually mean to move in that direction, but really, when you do take a look at it, it really is all about being able to invest in yourself, being able to understand these markets. I mean, right now you got the Dow futures up 85 points right now. The S&P futures trading out at 1308 and a quarter. Wouldn't you like to know where those are going? Well, there's an AB equals CD pattern that's setting up there, just like there is in anything, whether it's gold, whether it's oil, and it just depends on what time frame it is that you're looking at. As long as you're over at the homepage of TFNN.com, if you have not ordered my special report, you want to be able to do that, because it is the way I give you the tool to be able to understand how to invest your long-term money. Because when I'm doing the show here, it's not so much, well, I got to get rid of that. It's not so much the short-term. I'm taking a look at short-term because it's just simply easier to show you the patterns that are set up here. But these patterns work whether it's on a weekly, whether it's on a monthly chart. And so go to the homepage of TFNN.com. If you have not ordered that report, do it. It's free. And as long as you're over there as well, you talk about being over there, you got the Great Panther Silver promotion. So you can win a free ounce of silver. I know it takes just a few minutes of your time, but, you know, which actually brings me to, before we go to take a look at the markets here, I got a number of emails, and they all seem to be around the question of, the questions were, Steve, how do you stay so motivated? So when I take a look at, you know, the thought process of what really is self-motivation. Now, for those of you that are just simply motivated, you already have this formula. In fact, it is the single formula that is out there for self-motivation. If you're not familiar with it, I'll give it to you. You might want to be able to teach it to your children, grandchildren, whoever it might be, or maybe you just want to understand how it is that you would motivate them. It isn't about taking a whip out. Of course, a whip, you know, can certainly get you motivated. But the real way to get self-motivated, it comes down to 4 words, folks. Write these 4 words down if you don't have them in front of you, if you're not familiar with them. The first word you absolutely have to write down is potential. The next word that you've got to write down is action. Of course, if you know it's me, it's about massive action. The next word is results, and the next word is belief. That's it. It is as simple as those 4 words, and it has to start with potential. What you have to understand, folks, is that in order to be able to motivate yourself or anybody else, you have to be able to show them potential. Now, just as there's a success spiral in self-motivation, just the opposite for self-demotivation. Not even sure if demotivation is a word, but you know what I mean when I'm saying that. So, but we're going to talk about self-motivation. You have to, in any endeavor that you take a look at, doing, you have to see the potential. That potential's got to be greater than obviously it is right now. And when it comes to trading the markets, if you're not in the markets, it's simply because you don't see the potential out there. In fact, the potential that you see is risk. That's why I want to be able to, that picture, that image out there where you can take a look at it, and some people take a look at it and they see a witch, and others and they see this beautiful girl. In fact, maybe during a break or something, I'll go ahead and pop it on the screen, or maybe it's tomorrow. Two people can look at the exact same thing and get two different reads on it. To a certain extent, that's a little bit about pattern recognition, but I'll show you the AB equals CDs. Those are easy to understand. They should be easy. We certainly can teach you how to do that, but it's all about understanding potential. And when you understand potential, folks, when you understand that you have more potential, what are you going to do? You're going to take action. Now, those folks who take little action get what kind of results? Poor results. Little leads to less. Everything. You've got to take massive action. When you take massive action, you're going to get a result. May not be the result you want, but you're going to get a result. And then, folks, what's going to happen is that's either going to increase your belief, and that's typically what happens. Even if you don't get exactly a result in that time frame, what you will, folks, is if you just simply understand your potential, you'll continue that success cycle. So that's just simply how I stay self-motivated. And, folks, that is the formula. So let's go take a look at the markets out here. Right now you got the Dow futures up 80, but let's look at the ES Mini. So as I mentioned yesterday, and even during the one of the shows, whether it was the Money Masters show or it was this 9 o'clock show here, the Trader's Edge show, we're showing you the A to B equals CD down. Now, what you see on my chart here, if you take a look at these four little black lines, there's different expansions. It's a Fibonacci summation sequence series out there. It's 1-to-1. You hear us talk about 100% a 1-to-1 A to B equals C to D, or maybe you don't hear us say that. When I say A to B equals C to D, I'm not just really talking a 1-to-1. It might be a 1-to-1, because that happens 60% of the time. It might be a 1 to 1.272. That's one of the Fibonacci expansion numbers. It might be a 1 to 1.618. Of course, I borrow from Tom's book. If you go read Tom's first book, I'm not sure if it's in the second book or not, but if you read well, it's really not his first book, it's his second and third book, but if you go take a look, when you do a 1 to 2, A to B equals C to D, folks, what normally happens, and I mean normally, you can almost, it's where you start to get to the odds of like 90+%. You immediately do a trend change. And what does the ES Mini do here if I'm taking a look at the A to B equals? See, our A point on the ES Mini, that's pretty easy, because that came as the market opened during that first half hour of trading on Sunday evening. So the A point, very easy to establish. That's where you see a major intersection here on the ES Mini. That was a high of 1342. The B point, you have to be willing to adjust. When you're taking a look at patterns that are unfolding, you have to take a look at adjusting. Why? Because the first B point actually came down at about 8:30 in the evening as the ES Mini traded down to 1334 and a quarter. And now when you're making these A to B equals CD patterns, you really want to understand how to buy or sell the D point. I did a workshop, a full-day workshop. In fact, if you still would like access to that, just send me an email, steve@tfnn.com, because that's really what you want to understand. You want to understand how when you get down to these D points or up to D points, depending on whether it's an ABC down or A to B equals CD up, you want to be able to understand what it is that you're looking for. And I use very specific criteria. We didn't get that criteria last night, really, until about the 6:30 time frame, but we didn't get a confirmation on it until 9 p.m. last evening. And so what we have going on right now in the ES Mini, once it makes an A to B equals CD down, it's going to make another pattern on the way up. In this case here, it's making an A to B equals CD up. Our A point, very easy to see. Most folks can see that. That's going to be the low that came in last night at 6:30. That low out there, 1297. 1297 is our A point. Our B point now is all the way up here at 4 a.m. as the ES Mini got up to 1309. ES Mini then pulls back just for a bit, for a half an hour, pulls back into the low of 1301.50. A 1-to-1 A to B equals CD. I'll go ahead and get rid of the ABCD down here for us. Might be easier for you to see. A 1-to-1 A to B equals CD takes you to 1313. The next one is 1316. 1.618, 1321. And a 1 to 2, 1325. Now, what you want to also be able to make sure that you have is you want to make sure that you understand your Fibonacci retracement and expansion numbers. Because if you go from the top, that top being the 1342 all the way down to the bottom, that was made at 6:30 last night, that 1297, what you're going to see is that sweet 618 coming together at 1325. 1325 also happens to be a 1 to 2 A to B equals CD. That's where it looks like the ES Mini actually wants to trade to. But the first level it's got to get to is 13.14 this morning. Should do it during the shows today. If it can't make it up there, it's absolutely showing you the absolute weakness that is out there. And you've got different signs out there. Certainly, if we take a look at the indexes, which we'll do, let's go pop over to the S&P cash right now, SPX. We take a look at it, and what you did have yesterday is you did have a bearish engulfing candle. Today is a day that you would get a confirmation of. But what was the S&P actually doing? Well, one of the things that it was doing was it was going and taking a look at that March 6th area. The low on March 6th was 1340.03. What did it actually get up to yesterday? It got up to 1335. Was trying to stretch, couldn't make it all the way up there. You did get let me make sure on the S&P that you got a bearish engulfing. You closed on Friday at 1325.81. You opened at 1325.72. You do not have a bearish engulfing on the S&P cash. You got a bear sash candle out there, folks. 877-927-6648. Give us a call. The theme park is open. You got the Dow up 75, ES Mini off 6. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gained access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back, 877-927-6648. And let's go take a look at some of the movers and shakers in the pre-markets. You got FDS is a ticker symbol, FactSet, RESH, R-E-S-H. What is FDS? Actually, let me, FDS. Sorry about that, folks. FDS, I got to type in the right ticker symbol, not GDS. That doesn't work very well. FDS, the ticker symbol, Fact. Yes, this is FactSet RESH Systems. So let's go take a look at, I've got Michael Kors up. Let's go take a look at FDS on the screen here. They are trading off this morning. They closed out yesterday at 104.57. They are trading, last trade just fired off at $96. They are taking it in the short, so it's just 100 shares. And so let's go see what they are moving down to. So the last high volume that we have out there is on March the 13th. The high there, $99.99, low of $91.09. So you can see why. Again, it's just so important to be able to understand where the. Sorry, I'm just multitasking here. So important to be able to understand where you've got high volume. Now, in the case of FDS, they've got a couple of different high volume bars out here. Right here in the same price range. 95.50 is the high from December 13th when it did 1.4 million shares. You did 1.6 million shares as it got to 99.99. So, we'll go ahead and watch this as it opens. Of course, the last trade, as I say, firing off in the $96 range. Their Q3 revenues, let's see here. They did $598 million versus, come on, what is it? 598 versus 534 last year. So that was growing. Their net income, 47.9 versus 43.3. So that was growing. So it must be the outlook that they are given here. If I can see the outlook, I don't see it, but clearly it must be the outlook that is driving this about 8% lower. We've got Michael Kors, K-O-R-S, is the ticker symbol. That is trading up about 12% this morning. They closed out at 38.18. They are trading out right now at 42.85. 100 shares just traded off. So where is Michael Kors headed to? If you take a look at the 42.80, it does have some volume right here at 46.62. 42.80, though. Michael Kors, let's take a look at this stock here. Went public back in December 15th, 2011. Let me just refresh the screen, make sure I've got everything here. There is a large gap in Michael Kors on February 14th. The low there was $39.25. If we take a look at A to B equals CD downs here on Michael Kors, the 8-point would be March 22nd, the high of $50.48. Trades down into a low on April 23rd of $39.73. Trades back up to the May 2nd high of $49.50. A 1 to 1.272 A to B equals CD on Michael Kors, $35.83. Of course, what it traded to was $35.50. So right now in the pre-market, trading all the way up. It's going to gap up this morning, 42.64. Last swing point high out there is at 49.50. And we'll take a look at the volume as that opens up. You have Texas Instruments out with numbers. Was they out with numbers yesterday? I don't know. I don't think so. No, that wasn't numbers yesterday. But Texas Instruments actually not doing much. So we're not even, that's up a nickel. We're not going to pay attention to that. Let's go take a look at Juniper Networks. JNPR is the ticker symbol. Juniper Networks right now trading up about 2%. Last trade fired off at 1670. They closed at 1640. Let's go take a look at this stock chart here. Juniper Networks having made an A to B equals CD down. Yesterday they closed out at 1640. It actually doesn't look like, so this is trading out right now at what, 1670? Does not look to me like the work to the downside is over. Why do I say that? It's trading inside that October 4th candle. You want to pay attention to October 4th, October 25th, and then October 4th candle. Let me just blow this up on the screen here for you. We'll draw a couple lines just so we can take a look at the volume as it has come into that area. This, again, is on Juniper Networks. And so I'm just going to draw a couple of red lines across the top and the bottom. That way it makes a little bit. You can see actually trading below October 4th. Okay, so that's important to take a look at. And let's go take a look at the volume pattern as it got below there. We're going to use the easy one. Was going to try to use the easy one. Let's see here. As soon as I get that line. Juniper Networks, October 4th. The volume there is 13 million shares. And as it came through it, folks, came through it with volume, 16 million shares. Looks like Juniper Networks wants to trade lower. 877-927-6648. We get back, we'll go see how these markets are going to pop and whether they're going to drop. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. You got the Dow up 40 points, S&P's up 4, Composite up 14, small caps up 4, Microsoft up 21 ticks, Intel up 22, Google down $1, Cisco up 11 cents, Apple up $2.71, and you talk about the Stars. The Stars were out last night in Los Angeles. If you didn't catch the game, I don't know how you could have missed it. It was on NBC last night, and the Los Angeles Kings beat the New Jersey Devils, and, you know, to me that is the greatest sport on the planet. There's nothing like a sport. You know, this is how life should be. This is how you should be when it comes to the markets. You know, in hockey, these guys are absolutely playing their hearts out, playing through pain, giving their all. You know, that's what's always talk about, you know, have you done your best? Well, you know, here's a couple players on New Jersey that probably don't think they did their best because they took some unnecessary penalties, especially in such a tight game and being on the road and wanting to get back to Game 7. And so I didn't like really seeing how the game transpired that way. But the bottom line was these guys, they fought, you know, in a battle. It's just like everything that you might do. You know, each day is a little bit of a battle. It doesn't, you know, you're at war. That you can mean that in a good way. I certainly mean that in a good way. And yet at the end of the game, no matter how much they punished each other, they shake hands. You know, shake hands, give each other hugs, congratulate each other. And that's really what it's all about. Maybe when you turn off your screens, you know, you ought to kind of mentally shake the hands with the market. Maybe you beat the market today or yesterday, and maybe the market beat you the day before. You don't want to give up. You want to be able to lace your skates back on, get back on that ice and play. And so for me, it's sad because now, you know, I've got June, middle of June, almost middle of June, and no hockey. I've got to wait till I think they start playing again, maybe in October. But it was a great Stanley Cup, and congratulations to the L.A. Kings out there. Now, if we take a look at what is popping and what is dropping, you got Michael Kors leading the charge up $3.80. It's up 10%. Under Armour up a couple of bucks. Siemens, AGSI, they're up 2% right now. You got Wynn Resorts at $1.27. That's 1% up. Apple right behind them. United Rentals, URI, they're up about 5% right now. And you got Fusion IO up 7%. So those will be some of the stocks that we can take a look at on the way down. You got FDS. We took a look at them in the pre-market. They're down 9% right now. You got Google down $3.80. You've got PNC Financial off about 2.25. Verifone Systems off $1. Harman International HAR off $1 as well. Well, I had a question in the den about my outlook on gold. And so what I've got here, you know, when you take a look at a chart, what I'm giving you is what I right now see as the long-term picture. So when I take a look at gold, if you're going to take a look at a long-term picture, you want to start with a monthly chart, at least in my opinion. You want to start with a monthly chart. Why? Because you got less noise out there. So the patterns are a little bit easier. They're more defined. And one of the patterns that I was sharing with folks inside the special report that you can get for free if you download it at the homepage of TFNN.com, what you're taking a look at is you're taking a look at the monthly version of the 50-day, 200-day exponential moving average. You are taking a look at that crossover that occurred right here during the April timeframe, April and May. And folks, when you saw now, gold went into a long-term trend channel. The last one was December 2008 when you had that 50-day cross to the upside. And so you just simply, from a long-term standpoint, you could have just, it just depends on whether or not you want a lot of noise in your life when you are trading and investing. And if you're a trader, meaning you're looking for short-term swing point, maybe AB equals CD patterns that are out there, then you want to pay attention to the shorter term. You want to pay attention to the daily, the 30-minute, the 10 or 15-minute charts that are out there. If you are longer term, you want to take a look at monthly and weekly. So you've got the crossover again. That occurred end of April, beginning of May. That says bearish. You can see here, this says bullish. When the blue line's above the red line, stays above there, you are in a bullish camp. When it's below, it says you're moving into a bearish mode, or could mean just short term, because if you want to take a look at the last time that we had that cross through, that was between September 2008, and again, you didn't get back in until December 2008. So there was a 3-month period of time. Maybe this is only going to be a 3-month period of time, but I know one thing. When you get that crossover, folks, and you're taking a look at your long-term investments, what you want to do is you want to miss the downside. You want to miss any large downside moves. That is one absolute. If there's an absolute that's out there, that is absolute. When it comes to protecting your money, doesn't matter. Off the table is good. Why? Because it could be in King Dollar here. But when that long-term chart tells you that you could be moving to the next bearish leg, then you just want to get out of Dodge. It doesn't even make any sense. There's not anybody, nobody. And if you can show me, give me a call. I'd love to be able to see it. But I know the charts just simply by studying, going back and taking a look at historical. I can't ever find a time where, if you just use this as the simple tool for and there's nothing simple about it. There's a lot of information that's contained in here that, you want to be out of the market when you have that crossover. You can wait. You'll catch the long-term moves on the way up. It's those longer-term moves on the way down that'll absolutely kill you. So that's the monthly chart. That's what the monthly chart tells you. Now, what does the weekly chart, right? You want to just start going down here. The weekly chart, as you know, I've been showing this for quite some time on gold, and this is the gold contract going back to October 2008. And if you take a look at the trend line, and the trend line is doing nothing more than just starting at the bottom of the candle. The trend line on gold on October 24th starts out at a price of 681 even. That next touch point that I use here, and you have to be willing to draw these trend lines, the next touch point becomes July of 2010 when gold is at 1156.60. Now, the next time that gold came down and touched that trend line was in December 2011 when it got down to 1523.90. Held that trend line, held it, and there was volume. If you can take a look at volume each time that gold got down there, you could see volume increasing. Well, what happened? What happened, folks, was in May, of course, May of this year, May Day. So May 2011 on the weekly chart, gold finally broke through that trend line. Now, when you break through a trend line, it is normal to go ahead and try to go back up and test that. Now, when you take a look at these trend lines as well, folks, you're not looking to be exact to the penny. But what you did have last week was you had gold try to get up towards the top of that trend line. It actually got up to 1556.40. It looks like it has a little bit of room maybe to get back a little bit higher and test it. And it really should. It should test it because of the hammer candle on the weekly basis that gold made on May 18th. So with regard to, the monthly chart is a much larger time frame. It's got a lot less noise than what we're looking at right here. This has got more noise. It's a weekly chart. Now that gold has now gold's, what Tom was taking a look at yesterday when we were doing the Money Master show was taking a look at this long period of right here, this whole period here. Maybe what gold is really doing is building cause, just simply in this consolidation sideways move that it's doing in order to be able to bust it down. That's certainly what the longer term chart is telling us right now. That is what the weekly chart, so that's what the monthly chart is telling us. This is what the weekly chart is telling us. And then, as I was pointing out yesterday, for gold to trade down to sweet 618, that's nothing more than a 0.618 retracement off of the lows going back to October, the last real major swing point in gold, the October 2008 time frame, all the way up to the high that was put in September of 2011. For gold to pull back to 1449 is nothing more than a dead cat bounce. So gold gets to 1449, there's nothing wrong with it. What I do expect is gold will pull back to the 0.618 area. That would be back at 1155. At 1155, no one's going to want to own it other than you out here, and we're going to wait. We'll wait for some type of other signal that'll be out there. But just simply, there will be nothing wrong with gold. That'll be a 1 to 1.618, A to B equals CD pattern. That pattern is still in effect here right now. That's a normal retracement, and that's where gold is going. Now, what else, if you want to take a look at gold, is priced in what? It's priced in dolares, right? It's priced in King dollars. If we go take a look at the long-term King dollar chart, the U.S. dollar index chart out here, and I'll put that up on my screen as soon as I can find. Here we go. So we're going to go do the same type of thing. I'm going to start with the dollar index. And we're going to start with the monthly chart on the dollar index. Here's the dollar index, and going back into the 1985 time frame. Now take a look at this. Is using that same technique. That's using the same 50-day, 200-day. And so in this case here in gold, I'm just simply going to go back into the 1995 time frame. You would have got into gold right around the $83, $85 mark. You would have ridden gold from $85. You would not have had a crossover until gold got up to the $100 mark, and you would have stayed out of it for several months. You would have gotten back in maybe in the February 28th, 2009 time frame, but you would have ridden gold all the way up. You would have also missed the move down on gold. So take a look at, now this is the U.S. dollar index. Forget it, it doesn't really matter what chart I'm looking at here. I apologize. I was looking at, not gold, but was looking here at the U.S. dollar index. But in this case here, this was showing you that the dollar was going to get weaker, and that's in fact what has happened. Now, what you did have here is you had on the monthly basis, you had that crossover. You get the 50-day, no monthly basis moving through the 200-day, that occurring in September 2011. That is another reason to absolutely be bullish on the dollar. Well, if you've got bullishness on the dollar, and we know the dollar index actually wants to trade up at least into the 89.10 area here at 82.57, that is going to go ahead and put pressure on the prices of gold and silver out there. So that is my rant. That is my rave. That is where I believe gold is going until the charts tell me something different. So let's go to Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding.
Hey, how you doing? I see there's a gap on J.P. Morgan. If you go back to April 6th, it closed at like 24, and then it gapped up to 26. So is it true all gaps get filled, and now's a good time to close that gap since Jamie Dimon?
So
Jamie Dimon, he should be in jail. You know that, him and Corzine.
Well,
right? This is a good time to close the gap and for all these.
So I was do me a favor, Victor. I was pulling up the chart. Which gap are you looking at?
Go to like April 6th and 9th in 2009. It closed at 24 something and it opened
April 6th, 2009. Okay, give me
2009. I saw the gap there, so it looks like they might close that gap.
That gap has been closed. Hold on.
No, it hasn't. Go back to April, right after May 7th in 2009, there's a gap. No, before it, in April of 2009, I saw a gap.
April 8th, the price point high there is 27.83.
Yeah, but go to like April 6th, I think it was. It closed at 24 something, and the next day it opened a lot higher.
April 6th. Yeah, I think we're pretty much looking at the same thing. I show it being April 8th when you had J.P. Morgan. The high was 27.83. It gaps up. The next trading session, the low is 30.20. April
but I think
9th.
There's a gap before that too. A week before that, though. There's no gap there. I don't know. I use
there's no gap that I see. No gap on my chart. Doesn't mean that it's not out there.
Any gaps in April or May there, right after the March crash?
Yeah, this is the one. I'm saying April 8th. April 8th to April 9th.
If you go back to March, I saw some gaps there. I'm not.
Well, any of those gaps absolutely look filled. But let's just take a look at April the 8th. Let's just go see when that... What do you think
could happen to J.P. Morgan? Are they going to, spank them tomorrow or just use them as a role-play model? The dollar should...
I have no idea.
Everything's a Ponzi scheme. All the derivatives, there's more derivatives than dollars out there. Why would the dollar go up? They can crash the dollar because then, you know what I mean? It's a matter of where you're going to hide your money.
Well, what's your question, though? I mean, why
is the dollar going to go higher now? Because we have just as big as a deficit as Greece and all those countries. It's a bigger problem.
Here's the cool thing, actually. The cool thing is that, you can... I see, what I don't do is I can't trade based on, news and noise that's out there, because that's all it is.
That's how the markets trade, though, every day.
Off of news and noise, markets trade based on what you actually see on the chart here. You take a look at volume configurations. You can take a look at candle configurations. And
do you think a healthy market goes up 2% and down 2% a day? That doesn't seem healthy. That seems like something that's going to implode into something bigger.
I think so. So I'll answer it like this. I don't think a bull market goes up and down 2%. I don't believe that we're in a bull market phase right now. And the charts tell me that we're not in a bull market phase.
Don't you think we should retract to that 999 at least? That's half of the 666.
999. I take it one day at a time. I mean, it's really simple. I take a look at the patterns that are out there, the ABCD patterns. It becomes easy to trade on the noise. See, that's the thing is nobody yet has been able to show me a trading plan based on news and noise in the marketplace. Nobody's been able to show me a trading plan based on the Fed and what the Fed might do. Nobody's been able to show me a trading chart based on, who's printing money. The way to really trade or invest, I think it's just simply just get rid of all the gray out there. Just go to the black and white. Just like.
Where do you think J.P. Morgan is going to go after he testifies and they have their little game and then Bernanke comes in? Do you think he's going to do quantitative easing or just
no idea?
Go down and buy it up down?
Yeah, I have no idea. Whether
it seems like the whole market, all these young Wall Street guys are all pumped up on quantitative easing. It's like the answer to everything.
Well, so quantitative easing, all that is to me is just noise. That's just absolute noise. I mean, you don't know. I don't know what they're going to do. But
you sell the news or you buy the news. Look what happened in your Spain thing. Spain, I heard Greece wants to stay in the euro because you don't want to get paid in drachmas because then you'll have no money in your pension. You know what I mean?
Yeah. Well, Victor, look, I really appreciate all that information. We're just going to go to break, and I do so. J.P. Morgan closing that gap here back in October 4th, 2011. So thanks for calling. I appreciate it. Right now, you got the Dow up 32 points. You got the S&P up 3, Composite up 9, Russell 2000 up 0.5%, leading the charge on the way up by $4. We'll be right back, folks.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks, and it's better today. It's Tuesday. It's Terrific Tuesday after the Money Master Show. That's coming up next. We've got Kate Stalter from 11 to 12, then Victor Jones, commercial-free, uninterrupted, 12 to 1, 3 to 4. We go all the way back out to California to Ken Shreve, and then back here from 4 to 6 for the Tom O'Brien Show. Now, taking a look at light sweet crude, trading out right now at 82.91, and light sweet crude yesterday breaking through with a fairly wide price bar, wide-ranging bar, breaking through the 0.786 retracement. That, folks, is the 786 retracement coming off of the lows, going all the way back to, of course, you could have guessed this, October 4th, when you had light sweet crude trade down to 74.95, and the high that was put out there was 110.55. Light sweet crude is on its way, and you take a look at the C to D leg here. Light sweet crude on its way to $65.27 when it will make a butterfly pattern out there. Right now, it is came down yesterday with about 304,000 contracts. So it is pushing lows with, it's going to need more juice on the way down, but it is pushing those lows. It wants to first at least get back to 74.95. If we take a look at, let's go take a look at the indexes. You got the Dow up right now, 57 points. The S&P is up 6. So we take a look at the Dow. Yesterday we were talking about the 4-candle formation that's out there, reversal candle formation. There's a 3-candle formation that those folks that follow Japanese candlestick charting called the Three River Morning Star. That is really not what you had out here coming from the time period of June 1st, June 4th, June 5th, and June 6th. You had a 4-candle configuration. Go catch the archive of yesterday's show. It's a good one because it's a candle configuration that's not out there in the public domain, at least that I know of. And so right now what you've got is you've got the Dow trying to get back into the range. The first range that we're really talking about is May 29th. That was a swing point that it rejected yesterday. If we take a look at the diamonds, though, which we'll switch over to in a minute. Right now, so if you're bullish, what you want to see is you want to see it close back above 12,154.60 today. You're right now at 12,453.50. If you are bearish, you want to see it close below yesterday's close, quite frankly. And so you've got the battle going on. The line has been drawn in the sand. Right now on the chart happens to be this red line that we're taking a look at. What the Dow did yesterday also, and I just was simply drawing just a simple trend line. The trend line coming off of the May 1st high. The next touch point on this happened to be May the 3rd. What did the Dow do when it got up to that area yesterday? It rejected price. It rejected price. It was going against the swing point. It was making 100% move. When you do that, you're going to do something else. You're going to pull back. Today's going to give us a good indication of whether that was just a normal pullback What do I mean by a normal pullback? Well, if we go simply from the May 1st highs all the way down to the low that was put in on June the 4th, what you're also going to see was that the same thing that was going on yesterday. So you had a convergence of three different things taking place at the same time yesterday. You had that downtrend channel that was trying to break through. Okay, couldn't do it the first time. You had a dead cat bounce, a 0.382 area that was also struggling with. That was at the 12,533. It had dealt with that really on 3 days. We'll see if it's going to try to deal with that area today. It did it the first time was on June 7th. On Friday, it closed above that area. Yesterday, tried to tackle it again and said, see, you don't want to be you. You know, today, it's trying to do that same thing. It's trying to tackle it again. Time flies here, folks, but the good news is I'll be up with my man, Tom O'Brien, in just a few. Thanks for being here. Have a great Tuesday. Look forward to seeing you tomorrow. Take care.
Well, it's all